There seems to be a lot of content out there that just doesn't seem like the best way to go forward with saving on taxes or getting tax deductions, business deductions. I think just the other day I saw something on how depreciation is a groundbreaking way to save money on taxes. And I have a real problem with that kind of advice, because most assets we go out and buy for our business to get that depreciation deduction, we're spending a lot of cash flow, or maybe we're taking on debt and we have a cash flow issue with interest payments related to those assets. Now, we should only be buying equipment or assets if we actually need them. We shouldn't be just running out and buying that seventh heavy duty truck because we don't want to pay any taxes. Equipment for our business, computers, trucks, cars, they're all depreciating assets. Their value goes down. Like they're not a good investment. They're not creating a long-term wealth solution. They're not getting you off the hamster wheel of needing to go out and make a bunch of money. I think it's bad advice. I think buying a piece of equipment, using depreciation at times to reduce taxable income and timing that with maybe a good year because you're going to need that piece of equipment going into the next year. Solid advice. That makes sense. Things I like are it's more about multi-year tax planning. We're in our earning phase. We're making lots of money, let's say, and we're doing really well. Are we maximizing something like a solo 401k where maybe our company doesn't have a lot of employees, or even better, we have a perfect fact pattern, a low employee census where we can do defined contribution plans and put tons of money away into a creditor protected account, earn income tax-free on that solo 401k or SEP IRA? Are we doing that first? Like, have we thought through taking money and putting it into that mechanism prior to rushing out and buying a truck at the end of the year? The other thing in that multi-year plan is, how long are we working for? How long are we going to be having all this earned income? We're fully utilizing, maximizing some of these awesome retirement plan solutions, but is there an opportunity to start investing in real estate in years 3, 4, and 5 leading up to retirement, and start thinking about shifting our time as solely running our business, but getting out of that so that we can qualify for that real estate professional, and then trigger huge cost segregation depreciation deductions on that real estate sort of in our wrap-up years, or maybe just as we exit our business. And then we have another great solution for all that pre-tax 401k, SEP IRA, defined contribution plan money, where we've set up in that plan that we're allowed to roll that money over into Roths. And so we buy a $2 million commercial building. Maybe we're going to rent it back to the business we're exiting. We get $1 million of depreciation potentially after doing a cost segregation study. And then in that same year, we roll over a bunch of that pre-tax money into a Roth, and we're still not paying any taxes. And we have that money sitting, still growing, not paying any income tax on it. And when we go to take it out in retirement, we're not going to pay any income tax on it. I mean, these are the types of things I'd like to see our thought leaders, our professionals talk about more, is this multi-year tax planning. And so many of our clients and people out there are looking for how to save money now, probably because you forgot to do any planning and you're just trying to solve that immediate need to save money. But getting with a tax professional, a CPA, and really sort of talking about a 5-year, 10-year plan. If they kind of know what they're doing, they should be talking about some of these things and not just, hey, run out and buy a truck. All right. Hey, if you like this, please let me know if you have any direct questions on any of the topics I covered in the comments. Like and subscribe. Appreciate the community. And yeah, thanks.